Hi, Mike Flores here, co-founder of Trade Prosper. Welcome to Section 7, Video 5, ATR. So the last stop that we're going to talk about is the ATR, or Average True Range. Now, different markets have different degrees of volatility and price range action, and this technique helps us fit that knowledge with our entry technique to maximize our profits. Alright, so what is an average true range? This indicator is going to be used on any market that you trade, stocks, forex, futures, CFDs, and the ATR indicator was created by Wells Wilder. The ATR is basically a measure of volatility in any particular market over a set period of time. This shows the extent of the price movement measured from the high to the low on any given day. Now, the ATR does not tell us any information on price direction or trend or entry levels. It literally just tells us the measure of volatility for the day. Now, high ATR levels usually let us believe that the markets are moving, and often the ATR will peak before the market price tops or bottoms. Now, low ATR levels tend to tell us that the market is quiet and most likely in a trading range. Now, there are a couple common type of ATRs that are used, time periods that are used for ATR. ATR 14, and then other common time periods are ATR 7, ATR 21, and ATR 40. We will use the ATR to help us determine our stop loss level. Many traders use it to help them determine how the market may move in the future. But let's talk about how we're going to use the ATR stop. Remember, the type of trading that we're doing here is with the channel breakout is we want the market to break out, catch the trend, and follow the move that way. So we want to pick an ATR time period that gives our trades room to work. So we're going to use the ATR 21, which is the 21-day time period. This equates to about 1 month of active trading. Okay, so as you see, we have a chart of Aussie dollar yen, the Australian dollar versus the Japanese yen. And what you see on the chart, we've seen before for the channel breakout technique. We have the 55-day high, we have the 20-day high, we have the 20-day low, we have the 55-day low, then we have the price action bars in green and red, and then we have the ADX below that. Now, we're going to add the ATR. So this is how we add the ATR. We click on this box, because remember, we're trying to add it to the bottom, not to the price action. So we click on this box, and it's in alphabetical order. We scroll down to average true range, and we click add. Now notice it'll pop down to the bottom. And then this box pops up. When this box pops up, you want to make sure the number of periods is 21. The apply to is at close. The width doesn't really matter. You can change that. It's not necessary. And the style, I usually leave it as a line, not a histogram or points or line and points, and definitely not invisible because we want to see it. All right, so now once that's done, I click X, and now here goes my ATR, my average true range. All right, let me just resize these to make them a little smaller. All right, so now let's talk about the channel breakout. Now remember that we have to have a couple things before we have a valid channel breakout order setup. So we're looking for a sideways setup, which we see we have the horizontal black line here for more than 1 week of trading, so that's good. We see the ADX is rising, so that's good. And we're going to place our orders. So when we see that we're near the line, we start looking to place our orders. So blue ADX, nothing happens, nothing happens. We can see nothing happens on any of these days. So this day we get really close, but we don't break through. The high of this day, if you look to the left of the cursor, of the arrow cursor, is 83.53, and the 55-day high is 83.57. So we don't get long on that day. The next day, however, we do get long. So where do we place our stop? So this is how we determine our stop. What you do is you look for the close of the day, and then you subtract 2 times the average true range 21. So what does that mean? So we see the close of this day is 83.53. This is where we're putting the order in. We put the order in on this day. So 83.53, and then we subtract, if you look down below here on that day, the ATR is 0.79239. Now I'm just going to use 0.79. So we see the close above is 83.53, and then we take away 2 times the ATR. And then our stop on that day would be 81.95. That's what we would leave. Pretty straightforward. Let me show you in an illustration. Let me pull out my sticky note. Here goes my sticky notes. Now we're going to talk about, let me move the sticky note so it's not covering that. Now we said the 55-day high is 83.57. So we'll put in 83.57 plus our cushion, right, which is 3 pips, and 83.06 is our entry. So that's our entry level. So now we're going to look for our stop loss, which is the close, 83.53 minus 2 times ATR 21. So that's going to work out to be 83.53 minus the ATR on this day is 0.79. So 2 times that is 1.58. And that means that our stop on that day will be 81.95. So on this day that we enter the market, on this day that we enter our order, the order will be 83.57, which is the 55-day high. You can see to the left of the cursor. So our entry will be 83.57 plus 0.03. So I put this backwards, sorry. 83.60. And then we'll see our stop loss will be the close of that day, 83.53, which you can see to the left of the cursor as well. The close is 83.53 minus 2 times the ATR. The ATR on that day is 0.79. So 2 times that is 1.58. So our stop loss on that day will be 81.95. Now the market breaks out and we do nothing. We leave our stop loss where it is. We're now in the trade on this day. And the next day that we adjust this is when we have a higher high, a new higher close. So this close is 83.53. This close is 83.14. This close is 83.21. This close is 83.73. So we have a new high close on this day. So on this day, we will adjust our stop again. And we keep doing that until one of two things happens. We get stopped out, or we get the ADX line above 40 and it turns down below 40 by any amount. Remember, the ADX turn has now been taught to you and is now in effect for every trade that we do for the 55-day channel breakout. You see, using the ATR, it's very simple to use. Now let me make it even simpler. Now I showed you the average true range there, but this way you have to calculate the 2 times ATR yourself. So what I have is an indicator that does the calculation for you. 2 times ATR. Now you'll see that on that day here we had 0.79. If you look below, this indicator calculates 2 times it for you, 1.58. So that makes it a lot simpler. Now this 2 times ATR 21 is not a standard indicator. It will be in your supplemental content section on how to add this if you want to. If not, the average true range is standard on most trading platforms or most charting platforms, and you can just use that one and times it yourself, whichever you prefer. Alright, so now I've given you all the exit techniques that you're going to use with the channel breakout, the 55-day channel breakout. You have, for futures and Forex, you can use last bar or the ATR 21. For stocks and ETFs, you use 20-day low or the ATR 21. Now, whichever stop loss you choose at the beginning of the trade, you must use that stop loss for the life of the trade. No switching back and forth. And remember, regardless whatever markets you trade, you must exit using the ADX turn rule. So the ADX goes above 40 on any day and turns down on any day, closes lower on any day. You exit on that day, market on close. No exceptions. All right, that's the end of this video. I'll see you guys in the next one. Thanks. Bye now.